In this video, we're going to talk about what the potential retirement planning changes would be if Joe Biden becomes president. Now, if you're a Democrat or a Republican, this video is for you because by the end of the video, you're going to know how your retirement plans work, how a credit works, how a deduction works, and what this could mean for your retirement. But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, certified financial planner, helping you reach your financial goals. So there is a proposed change from Joe Biden if he becomes president. So it's a proposal for a proposal. And here's how it works. It's actually pretty simple. For your pre-tax retirement plans, including 401ks, 403bs, 457s, traditional IRAs, any of the pre-tax retirement plans, currently, if you put $1 into those retirement plans, it is a deduction. So it's reducing your taxable income for each dollar that you contribute to that retirement plan. So the tax system is progressive. So the more you earn, the more you're taxed on per dollar basis. So what the change would do is it will change it to a credit. So what the whole change is this. It's quite simple. Any dollars that go into these retirement plans, instead of being a deduction, it will be a 26% tax credit. So there will be no deduction for contributions made into your pre-tax retirement plans like the 401k, 403bs, 457, traditional IRAs, SEP, Simples, all the pre-tax accounts. It will be a credit instead of the current deduction. So to really understand this, you're going to need to understand what a credit and a deduction is. So I'm going to pull up on the screen the tax brackets for 2020 and walk you through exactly what taxes look like right now. So these are the 2020 tax brackets, and you can see this first column over here is for singles, and the second column is for married filing jointly, and the third is for head of household. So let's start with this single column. So to understand how your taxes work, your first $9,875, if you're filing single, is taxed at 10%. Now, any dollar that's over $9,875 is then taxed at 12% until you reach $40,125, and then everything over that amount is then taxed at 22%. So if you're earning $40,125, you're not paying 22% on every single dollar. You're paying just what I walked through, where it's progressive. So each band you're paying a certain tax rate on. So even if you earn all the way up to the 37% tax bracket at $518,400, or even if you earn $1 billion, you're still never going to pay 37% on every single dollar, just every single dollar over that tax bracket. So that's how the taxes work. So the deduction would reduce that taxable income. So let's make the example really simple. Let's say you earn $9,876. Well, that means $9,875 would first be taxed at 10%, and the $1 that's over $9,875 would then be taxed at 12%. So if we contributed $1 to the retirement plan, it would deduct it from our total taxable income. That means if we did that $1 into, say, a 401k or traditional IRA, that means our taxable income would then be $9,875. So that is a deduction. So now let's talk about a tax credit. Now, the tax credit goes directly against your tax liability. So what does that mean? So in the same example, if we're looking back here, we're looking at $9,875. Our total tax amount, the amount that we're going to pay in taxes, is $987.50. How did I get that? $9,875 multiplied by 10%. Now, if we earn $1 more in the same example, so it's $9,875, we're going to increase it by $1. That means on that $1, we're going to pay 12 cents. Because it's the only dollar that's in the 12% tax bracket. So our total tax liability at this point, if we're earning $9,876 and we're filing single, so it's the $987.50 plus our 12 cents. So that's $987.62. So with the Biden proposal, we would get a 26% credit on the $1. So we would save 26 cents. In the deductible example, we would only save 12 cents or 12%. Said another way, if we were in the 12% tax bracket and we contributed $100 in the current plan, that means we would save $12 or 12%. In the proposed plan from that same $100, we would save $26. So more than double the amount because we're in the 12% tax bracket. And if we look back at the current tax brackets for 2020, you can see that it jumps from the 24% tax bracket to the 32% tax bracket. So once you get over that threshold is when it would be more advantageous to have the current plan versus the proposed plan or the proposal of the proposal for if Biden becomes president. In those examples, comparing the deduction and switching it to a tax credit sounds more advantageous for anyone that's earning less than the 32% tax bracket. If you're single, married, filing jointly, or head of household, they all have different thresholds. But if you're below that 32% tax bracket, then the proposed plan would sound like it would be more advantageous, but it's not entirely black and white. If you're purely looking at it from a credit and a deduction standpoint, the proposal would absolutely help lower income earners have more of an advantage by saving into their retirement plan. But what you forego is reducing your taxable income could potentially disqualify you from a ton of different credits. For example, the Savers Credit, Child Tax Care Credit, Child Tax Credit, the Healthcare Subsidy Credits. All of these have certain income thresholds, and including the recent stimulus checks. So any of these credits that you might otherwise qualify for or are just out of reach, there wouldn't be anything else that you could do by saving into the retirement plan to reduce your taxable income in order to qualify for those credits. And those credits are all over the board in whether or not you would qualify for them, from low income earners to high income earners. Now, the reason that Biden wants to make this change is to incentivize lower income earners to save into the retirement plans. But I don't believe that's entirely the reason why lower income earners don't save. It usually has to do with the fact that there's no money left over at the end of the day to save. I really believe that most people want to get on track for their retirement and put money aside into their retirement plans. It really just comes down to understanding how much they should put in, where to invest it, and whether or not they have the money to actually save. And under the current plan, when you're making those minor changes to save a little bit more in order to get that additional credits or the credits that I pointed out, those are usually a much bigger benefit or net benefit than the proposed plan of just getting the 26% tax credit. So if you're reducing your taxable income in order to qualify for another tax credit, then you're really getting the deductible portion and saving in taxes and getting that additional tax credit while you're saving. So let me know in the comments down below if you'd be more likely to save or not if we move to the 26% tax credit for retirement planning contributions. And that is the proposal for retirement plannings if Biden gets elected. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.